good morning, ladies and gentlemen. My name is Stanley Hon. I'm from FA Advisory, Sendran Berhad. Thank you so much for EB Start and Womanville inviting me to share a topic about risk management and mitigation for entrepreneurship. So how are you today? I hope all of you are well and safe. Okay. So before we start the topic, let me introduce to you some story about myself. I was a chartered accountant by profession before I converted my career family, okay, to make sure that they have a plan B for the business regardless of life situations and market conditions. Well, actually having working with so many families, I realized that it's never been easy to become a businessman and entrepreneur, especially nowadays, especially during pandemic time. In one hand, you need to deal with the challenging business environment. You need to taking care of the revenue. You need to look into the bottom line. And on the other hand, you also have to have the responsibility at home. You need to take care of the loved one and so on. And our living standard is increasingly high, but our business margin are getting lower due to tough competitions and tough market environments. So let me share with you my life I went through 20 years ago when my father-in-law was diagnosed with terminal cancer and multiple stroke at that time. So actually we have used all our savings, okay, to pay just for the medical bills. So end up we fall into massive debts, we fall into massive poverty. I remember I don't even have the money to pump petrol for my car and to pay for the tools and so on. So why this thing happened? Because we don't have a proper financial literacy. Okay. So because of that, I've decided, well, I need to study a CFP, and we adopted the best wealth strategies from UK, US, and Singapore to help as many people as possible in 3 ways. Okay. First of all is to enhance our asset, reduce our liabilities as well as the risks. And last but not least is to unlock the debt asset and hidden financial potential. So let me share with you my slide. I hope you can see. Okay, so actually we strongly believe that all the financial product in town should not be sold. It should be professionally prescribed after we know what is the precise diagnosis. Okay, before I start the topic, I wish to share with you about the entrepreneur mindset. I hope all of you here, including myself, we are the entrepreneur, regardless of whether you are in the new start business or whether you are already become an entrepreneur for many decades of years. Well, starting up your own business and running your own company may be the most exciting, I would say, most rewarding, most positive thing that you have done over your life. But definitely, it can come with a lot of challenges as well, a lot of worries, a lot of unsleeping well nights, and so on. We need to learn how to embrace entrepreneurship mindset and cultivate key characteristics such as success that will help you to build up your good business empire. But do you aware that apart from focusing on our growing business opportunity, business expansion, and so on, we might also need to look into what is our business risks. Okay, so today I will spend the remaining 40 to 45 minutes of your time to share with you what is actually about the entrepreneur risks. Okay, so in this section, I'm going to share with you, is your business exposed to risks? Do you aware that is your business exposed to the risks? And do you know what is the controllable risks and uncontrollable risks happening in your environment, especially during this pandemic period? So pandemic is classified as uncontrollable. So do you have any risk mitigation strategy to cope with that? And would that be any impact to your business? And last but not least is what is the solutions that you can mitigate to minimize the impact? Okay, seems to be a bit heavy, but let's go through one by one. So first of all, ladies and gentlemen, regardless of you like it or not, since you are in the entrepreneurship. So my first advice is begin the business with the end in mind. Okay, so what is the meaning? So when we talk about the business risks, basically there are two types. Type 1, we call it as a controllable risk, and type 2, we call it as uncontrollable risk. So actually, what is the difference? Why you say, Stanley, what is control, then suddenly you say uncontrollable? Let's we go into further details. So first of all, when we talk about business controllable risk, basically is talking about what is the things that is under your monitoring, is under your control. Example, quality control. Quality control, when we talk about the QC things, where we can improve the quality of our product or our service over the years by putting in more strict internal controls and procedures. And eventually we also can upgrade our skills and knowledge and so on. Okay. And how about the competition? Competition, regardless of you are in which industry, basically we are facing competition. So as long as you have a very clear business direction, with your experience, with your skills, with your networkings, and so on, basically we are able to overcome the competitive risk, and you are able to provide a value-added service as well as a value-added product to your client. So this is something we call it as a business controllable risk. That is whatever you can monitor, you can review, you can control, and you are quite comfortable with that. Okay, but how about the uncontrollable risks? Okay, so ladies and gentlemen, if possible, please get your pen and paper ready. We have one small assignment for you. Okay, so what are we going to talk about? So when we talk about the uncontrollable risks, so first of all, do you think that your business explore to any uncontrollable risks? Okay, so what kind of uncontrollable risks is beyond your control? Okay, example, pandemic, natural disasters, okay, the sudden death of the business owner, or it can be any events that might impact the business unable to continue. Okay, so with all these uncontrollable risks, how are you mitigate the impact of your business? Okay, so when we talk about the damage, right, basically what we can do is we can classify the risks into two types. First is talking about the primary risks, and the second is talking about secondary risks. What is that all about? Let we go into one by one. So when we talk about primary risks, basically it is all about the soul of the business. Okay, so it is directly related to the very important person behind the business, that is yourself, that is the shareholder or entrepreneur risk. Okay, then the second one is talking about the financial risks. What is the financial impact, especially during pandemic? So do we have any counter solutions on this? And the third one is talking about the human capital risk. We can't deny that human capital will be the most important asset in our company. Okay, and when we talk about human capital cost, it can be easily about 30 to 40% of your total overheads. So this few category is considered under primary risks that we need to take into consideration. And how about the secondary risks? Secondary risk is more towards on the tools to the business, and it help you to generate the revenue to the business. Example, your fixed asset, your buildings, your plants and machineries. Okay, then your business operational, a simple negligence by our employees or by our officer or even by ourselves, it might cost us a lot of money and time to do the recovery. And last but not least is talking about the technology risks. So nowadays, a lot of us, we decided to convert our business model from a conventional way to online, right? But we also need to take into considerations the risks behind the technology. So we might encounter a lot of cyber attack, data loss, or even we might lose our clientele information due to cyber attack and so on. Okay, so we go to one by one. Okay, do you feel that with the touchwood, if due to the immediate predecease of the owner or immediate disability of the business owner, would it able to cause a business fall into liquidation or not? Okay, because this is quite common for Malaysians because most of the SME in town, they are the business owner. At the same time, they are also the guarantor for the company because they might borrow a lot of monies from the banks and financial institution. So when there's a touchwood certain predecease of the business owner or the guarantor of the company, most likely the bank will come in and pull back whatever financing facility, and they might need to force sales the business owner personal asset, including their personal properties and so on. So indirectly, it might cause the family members fall into bankruptcy, and they might have a very big issues to keep on the basic necessities and life continuity and so on. So they will need a comprehensive risk management strategy. So what are you talking about comprehensive risk management strategy? So first of all, as a business owner, we need to aware what is the risk we are encounter. So ladies and gentlemen, I believe all of you, you are the CEO, you are the chief of everything officer. At the same time, you are the company guarantor, and we also have a lot of our loved one to take care in our family. So including the minor child, our parents, and so on. And at the same time, we are also the chief strategic officer for the company for their ongoing business operation. So I put you into a very simple scenario here. Okay, this is a SME story in Malaysia. Okay, Mr. Yao is a very successful businessman. So he gets best buddy in town, Mr. Tai lah. Okay, so Mr. Tai, they went into what we call as a business ventureship. So Mr. Tai is owning 60% of the shareholding, while Mr. Yao is the minority shareholder lah. He owns about 40%. Well, the company is doing pretty well. The net profit every year is about 2 million. This is considered as one of the very successful SME in town. And the business valuation is about 10 to 15 million. Okay. But unfortunately, Mr. Yao has been diagnosed with liver cancer. So his health is fall into big trouble. So he thought that, well, I just need to write a simple will and I need to pass over all my assets to the wife and the children. So he's really confident that his partner, Mr. Tai, will take care of his wife and so on. So until he passed away. So when the wife want to dispose let Mr. Yao shares and get the money from Mr. Tai. So unfortunately, Mr. Tai has turned her down because he was already controlling and running the company because Mr. Tai is 60% of the shareholder in the company. So in this scenario, Mr. Tai, well, he will just say, sorry, madam, I wish to help you and so on. But unfortunately, you know, since Mr. Yao is already not around, the business is being impacted. We have lost so many clients and so on. So even though our company valuation is on 10 to 15 million, so basically I need to offer to the spouse at least 4 to 6 million, correct or not? But unfortunately, due to the business downturn and so on, so sorry, madam, I only can offer you 1 million. So this is a very common scenario happens among Malaysian. If the entrepreneur together with their partner forgotten to do what we call as a company will, or in precise term, we call it as a business value protection trust. So in this scenario, the wife have no choice. Well, she need to accept the fact that he can only get 1 million. So he the husband might leave a lot of liquid to the wife and so on. Okay. So in this scenario, how are we going to convert non-liquid business interest into liquid income? It means that how are you going to convert the business empire into a guarantee fundings to the families and the loved one on top of the table if touch wood something bad happened to Mr. Yao? All right. So because the problems to family and the business partner is that if we don't do a proper exit planning, it might lead us a big trouble, a dispute among the family members, as well as to the limiting shareholders and so on. Okay, so let me go through one by one. First of all, for Mr. Yao and Mr. Tai case, so Mr. Tai, he got no choice. He knew to form the new partnership together with Mr. Yao's wife, correct or not? So in this scenario, Mrs. Yao, she might know anything about the company operation, but yet she will requested a full salary payments based on Mr. Yao. So let's say example, during the lifetime, Mr. Yao is taking about 20,000 salary every month. So in this scenario, the wife might come in and ask, I don't care, Mr. Tai, please continue to pay me 20,000. Okay, so in this scenario, it's very hard for the partnership to go on. Okay, so there might be a lot of arguments happening in the future. And definitely with the immediate passing of the shareholder, it might cause a lot of serious disruption to the business. Okay, recently I got one of my IT company's clients, eventually when one of the shareholders will pass away, so the business was seriously interrupted. There are 4 of them, so they got no choice but to set up another new company, and they decided to transfer all the client database to the new company. So the spouse is in shock, and eventually the remaining shareholder is leaving nothing, okay, but just an empty company to the late spouse. Okay, so this thing if happening is quite common, I would say, in Malaysia if there is no proper documentation being done. Okay, the third one is talking about no outside market for the share, because back to Mr. Tai and Mr. Yao scenario, basically it is very hard for Mr. Tai to get a new investor or new shareholder to the company unless the particular company is doing quite well. Okay, but most of the company is they are facing a challenge to get a new investor, and eventually the new investor might put in a lot of terms and conditions for the new ventureship and so on. So it might cause the estate shrinkage to the businessman itself. Okay. Number 4 is talking about what is the common problem, the financial difficulty for the family. Okay, because the late Mr. Yao, who do not want to be in the business, who want to sell the business interest very quick. I mean, because if the wife who don't even know how to run the business, what for she want to keep the company shareholding for? So definitely she might urgently sell off the company shareholding in order she can get a guarantee funding to take care of the family and so on. So if there's no proper pre-arrangement during the lifetime on the buy and sell, right? So basically the families, regardless of which family, definitely they will suffer financially. So that is the major disaster happen. And last but not least is talking about no funding to buy out a business owner. Even for Mr. Tai, if he is so sincerely he want to buy over the shares of Mr. Yao, do you think it's very easy for Mr. Tai to cash out immediately 4 to 6 million from the pockets or from the company just to pay for the buy over? I think that is quite impossible. So the funding will only can be done normally is through installment. Okay, through my past experience, normally it's by cash installment or by a guarantee funding that is using a life insurance to facilitate the buyout. So in this scenario, business value protection trust will be very important. First of all, both the shareholder, they were able to ink the agreements on the business value during their lifetime, and they are confirmed on what is the selling price to each other and what is the event that the business that can be transfer to the remaining shareholders and so on, and how to fund for the buyout, how to transfer the remaining shareholding to the remaining shareholder, and how to distribute the sales proceeds to the family. Okay, so they can expressly mention in the trust deed how to use the proceeds to fund for the family expenses, for the children educations, for the medicals, and so on. It can be expressly mentioned. Okay, so when the buy-sell agreement take place, it can be trigger a lot of triggering event. The basic one is talking about the death, disability, coma, critical illness, or even the deadlock between the business owner. Okay, let's say Mr. Tai and Mr. Yao, they went into argument and they decided to end the partnership. So eventually this can also be triggered as well. Or the loss of professional license. Example, to some of the professional firms like accountancy or architect, they might lost their professional license due to unethical doings and so on. So in this scenario, the shareholder can sell off to the remaining shareholders and so on, or they can sell to the other competitors at the arm's length price. Okay, so this is a triggering event that can happen during the buy-sell. And what is the document needed? Basically, the most important is talking about the buy-sell agreement. We need to have a validate buy-sell agreement drafted by the legal advisor by putting in what is the pricing, what is the sales and purchase terms and conditions. Okay, and definitely to funds on the sales and purchase, basically we will need some asset to fund on that. First of all is normally most of the common Malaysian, they are using life insurance, or secondly, they also can funds through the cash installment and so on. And with all this, we need to put the document into a validated power attorney. So when the triggering event happens, we can use the POA to facilitate the immediate transfer in the High Court. Okay, so this is very important. And trust deed will be very important because when the family member receives the compensation, right, the guarantee funding, right, so how the family member able to utilize the fundings and so on. So in this part, they will be very important. Okay, the trust deed will expressly mention how to utilize the distribution and so on. Okay, so the advantages by setting up a company will, or what we call as a business value protection trust. First of all, we are providing a guarantee fundings for the buy-sell. The second one is both of the shareholder that already enter into a mutual agreement, okay, to avoid any arguments and so on. And there will be a very smooth transfer by using a POA document by the trustee corporation, okay. And we are able to convert the non-liquid business into liquid income. You try to imagine, I mean, some of the companies, example like investment holdings company, they got a lot of properties or investment properties inside together with the land bank and so on. So it's very hard for them to liquidate the company and immediately pass the money out. So what they can do is they can use the cash installment as well as the guarantee funding from the life insurance company to execute on the buy-sell. And the remaining shareholder definitely they can enjoy their life as normal. And last but not least, the A's are free from the business. So this is the important things about setting up a business value protection trust. So this is something under uncontrollable. I mean, touch wood, if the entrepreneur or the business suddenly pre-deceased and so on. Okay. The second very important uncontrollable risk is talking about the financial risk. So regardless of a new start business or a company in town for many years, basically the common issue we encounter, especially in the SME, is most of the bosses in town, they like to combine together their personal account money and the business account money, especially on the sole proprietorship. So this is very common. So during the crisis happening, especially on this COVID right now, so they are unable to split out which money is belong to themselves, which money is belong to the business and so on. Okay, so this will be very troublesome. So when we go and help our clients, normally what we do is we'll help the client to do what we call as a financial stress test. Basically, we are able to identify with this financial stress test how many months of the liquidity available, I mean the cash and cash equivalent available, in order he can sustain. Okay, touch wood if due to the MCO right now. If there's no business income coming in, so with the cash and cash equivalent available, how long the company can be sustained. So if the things already come out, then how about your own family financial stress test? Have you done own for your personal financial balance sheet and so on? So it's very important that you know with the cash and cash equivalent available with you, how long you can sustain if there is continuously no income. Okay. So during this process, most likely we will need our client to practice few things. First of all, is you need to visualize your liquidity. That's very important. You need to identify what is the cash flow and what is the asset net worth you have, and is it possible that you can turn some of your asset to a liquid cash if the triggering event or the crisis is continuously. Okay, and do you have the enough sinking fund to face through the crisis? That's very important, because I see a lot of the companies in town, they don't have much cash flow in hand. So during the last MCO 1.0, the company is only able to sustain maybe 3 months, and after that they will be solely depending on the loan moratoriums, extending the payment to the creditors and so on to sustain the company. Okay, I think later I will touch more on the resource optimization strategy as well, on how the SME can encounter on this part. Okay, and the third one also very important. We need to able to identify if our existing asset category enable us to generate a good passive income for ourselves. Okay, because this passive income eventually will help us to go through the crisis, because the passive income, they will pay us a monthly income in order we can trigger the uncertainty. So what is your company debt service ratio look like? Okay, it means that how many percent of the income basically you need to use it to pay for your loans, hire purchase, leasing, and so on. So if your indicator is more than 35% or 40%, eventually that will be very, very dangerous. So it's good from time to time you engage with accountant and review the debt service ratio. Okay. And last but not least is definitely you need to check on your AP and AR. AP is basically talking about the accounts payables to the creditors. Please monitor it closely. Okay, and for the AR as well, AR is talking about your debtors receivable. So make sure that you don't have a lot of debtors. Okay, you can have a lot of debtors providing you have a very good credit control strategy, and you also can implement what we call that trade credit insurance to make sure that this thing can be covered very well. It means that touch wood, if there's any default cases from your debtors and so on, eventually the insurance can able to pay you on that part. Okay, so the bad debt recovery strategy is very, very important. Please discuss it with your accountants, with your auditors, as well as with your credit control officer. So I wish to spend some time talking about the resource optimization strategy. So what is the meaning of resource optimization? Especially during this COVID-19, the first thing we need to do is we need to check on the company cash flow lifespan period. It means that based on the stress test ratio, how many months of cash and cash equivalent we have in order we can sustain the company for continuously operation. So this is very important. And normally this will be the step number 1 we help our client to do. Then for number 2 is talking about what if scenario. So what if the MCO extended for another 2 weeks to 1 month? What if there will be further CMCO, EMCO being enforced and so on? So how would it impact on our business revenue? So we can put in a what if scenario to do the financial modeling. Okay. Then you also need to check whether you are going to receive any subsidies from the government. With the MCO extended, most of the governments they are going to subsidize on some of our opportunity cost forgone. Okay, this one you can check with your accountants because for Malaysia over the past 1 year, Malaysia government actually have already subsidized up to about 26% of Malaysia GDP. Okay, to help the SME, to help the businessman and entrepreneur to go through the crisis. Okay, it also involves subsidies to the low-income employees, to the children, to the elderly, and so on. Okay, and we also can negotiate with the employee because to make sure that none of our employee to lose their job. Okay, we might able to discuss with the employee and check with them. Would they able to reduce their wages or salary? But we maintain the basic employee benefit. I see some of the SME in town is they implement deferred salary payment. It means that they only pay 40% of the salary, and after MCO, then they will start to repay back the salary stage by stage. Okay, so this is most of the SME doing in town. Okay, and do you do any refinance of your existing asset? Maybe you have some properties, you have some land banks that already fully paid off. So during this critical time, maybe you can discuss with your banker and see whether part and partial of the asset it can be refinanced. Okay, and take note, don't put so many stocks in your warehouse because you put so many stocks in the warehouse, it might be a disaster. So if possible, please implement a JIT stock system. Okay. Then to dispose whatever unutilized asset, some of the companies they have a lot unutilized asset. If possible, you can convert it, or you can rent out, or you can lease out, and get some additional cash during this crisis time. This one is very important. I see a lot of SME business nowadays. They are very good transforming their business activity from a traditional activity to business digitalization process. It means that you get a SEO or you get a social media expert to help you to market your products and so on. Okay, and then PPO as well for some of the non-essential sectors in our company. Example like payroll, example accounting, and so on. Basically, we can do the outsource activity to reduce our headcount, and at the same time we can maintain a lower cost as well. Okay. Last but not least is talking about the M&A, where we can do the merger and acquisition with our competitor, with our supplier, or together with our clients. Okay. So in order we can achieve more efficient working environments and more efficient cost strategy. So this is talking about the financial risks. The third one is talking about the human capital risk. Human capital basically is constitute a very important pillar in the company. Normally, they will constitute at least 30 to 40% of the total overheads in the company. So if, touch wood, if we lost a key account manager yesterday, would you think it will impact on our business or not? Basically, they will bring a serious disruption to our companies because we might lose our revenue. We might need to incur a lot of trainings and redevelop costs and so on to get a new account manager. So their skills might need to take some time to skill up as well. So this will be the additional cost of the company, and it might impact on the profit and bottom line of the company. So human capital risk is very important. So most of the SME in town is they will get their very important employee to cover them with the key man insurance. Okay, this is one of the way. And most of the SME they cover most of the staff with group employee benefit and so on to reduce whatever unnecessary human capital cost if due to the catastrophe happen. Okay, so this three is a very important uncontrollable primary risk that will be happen to a company. Now we talk about secondary tier risks that might be happen. Okay, so what is the second tier risk? Second tier risk basically is talking about our fixed asset, our liabilities, our technologies, and so on. So basically, if the thing has been impacted, basically most likely our revenue and our bottom line will be impacted. Try to imagine if one of our factory premises has been burned down by the fire. So definitely our production line will be impacted. We might need at least 3 to 6 months or 1 year to recover and back to normal again. So the company cash flow might fall into a very difficult positioning, and some of the business they might fall into business liquidation. Okay, because they might lost their contract, they might unable to pay their employees and so on. So the solution is we are able to transfer the risk to a third party. Okay, so what is the risk we are talking about? The first one is talking about the physical asset listing, physical asset risk. Okay, so a fire extinguisher itself might not able to help us to save ourselves to save our company from the fire. So basically, the fire can be happening through a lot of ways. It can be due to explosion, it can be due to lightning, it can be due to bursting or overflowing of water tanks, okay, and so on. So you need to make sure that if your company have a fire policy in place, make sure that it cover with all the perils listed below, and it will depends on where is your physical business asset located. Okay, it might not be enough. Example, if you are operating a factory, there's a lot of electrical installation being done. So you need to make sure that you need to put in additional perils on the electrical installation cost, because if the thing cause a fire, basically the rider itself will able to cover you on that part. Okay, and apart from the buildings, we also need to consider on the other losses as well. Example, our inventories, because inventories basically might constitute maybe 10% or 20% of your balance sheet. Okay, so touch wood, if the fire also burn down the building and the inventories as well, it might bring a serious disaster to our company's operation, and we might lose our contract and so on. And same happening to our plant and machinery. Let's say if your plant and machinery is all types of sophisticated machinery, so make sure that you are not covering them with the basic fire itself. What we need to do is we might need to cover them with the oryx and so on. Okay, and if you are the investment holding companies, so by burning down factories or buildings, it might cost us financial consequences loss. It might cost us on the loss of rental and so on. So all these we need to take into considerations on the calculations of the submission. You can discuss in details with me privately, or you can post me any questions after the talk as well on this part. Okay. So apart from the building risks on the fixed asset risks, what is the other risk a company might encounter? Okay, the other very important risk I think most of the SME is omitted is on the business liability insurance. When we talk about business liability insurance, basically it will cover the companies on the losses to the business owner itself, maybe due to the legal suit or on the financial losses. Okay, so what type of the policy that normally we cover for the clients basically is on the public liability, regardless of whether you are open a shop, you are open a factory, or your premises is located in the shopping mall. I think the most basic and important policy you need to have is on the public liability. Try to imagine if a client walk into your shop and accidentally fall down and cause him or her an injury, so he might come and sue you. So basically, this public liability might cover you. Or I put you into another scenario. If your signboard falling down from the second floor and it caused an asset damage and bodily damage to the general public. So this public liability will cover you as well. And let's say today, if you are opening a restaurant, okay, do you aware that if your client is eating in outside the shops, okay, and the car is crashing in and cause an accidental death happen to the client, they can sue on the public liability. Liability. This is very common if you are operating healthcare product, or even if you are opening a factory and so on. Basically, we need a product liability to enhance our clients' confidence on the product, and it also can cover our clients' claims if there is any bodily injury or hospitalization occur by them due to consumption of our product. So this is one of the very good product. Eventually, it can help you to protect yourself, and also can help you to enhance your end client's confidence level. The third one is talking about the D&O liability, because if I'm the consumer, after I taking the food in the pharmacy, okay, let's say I buy a drugs in the pharmacy and it cost me bodily injury or unwell, I might need to admit it to the hospital and so on. So in this scenario, I might claim on the product liability, and together I might sue the company under their D&O liability for their negligence and so on. So normally these two is quite important if you are operating a healthcare industry. Okay. Number 4 is talking about comprehensive general liability on workers and contract. So let's say if you are getting a lot of contract from the clients, basically you need to cover your employee safety as well as your client side asset. Okay, because simple negligence by our employee might cause our client to lose their asset and so on. So basically, your client might need you to cover on this CGL liability. Okay. Number 5 is talking about professional indemnity. Today, if you are a doctor, accountant, or even ourselves as a licensed financial advisor, we need to cover ourselves with a professional indemnity insurance. This is very important. Last but not least is talking about the employer liability, because as an entrepreneur, normally we will employ a lot of employee to run the business for us. So if there's any negligence that caused the employee to pass away and so on, normally the family member might come and sue us. So definitely employer liability will be a very important policy for entrepreneur as well. Okay, this is talking about the business liability. Okay, last but not least is talking about the technology and cyber risks. Because nowadays a lot of companies, they are converting their business model from conventional to cyber and so on. Or even if you yourself is doing the cyber business, so there might be a possibility that the technology failure might cause the business to be interrupted. Okay, and it might be some cyber theft will come in and taken away of our important client information and so on. So indirectly, it will cause our client lost their monies and database and their reputation. So most likely, if you are doing in the IT business, you need to cover yourself with the cyber insurance. Okay, so the cyber insurance basically it will cover on the incident response expenses, because normally they will need to engage a lot of the professional to come in to help you to do the recovery. Example on the forensic accountant, the IT experts, the public relation expert to help you to mitigate the losses, and definitely the policy might able to cover you on all types of business interruption on your future loss of net profit. Okay, and the recovery cost will be quite substantial as well, and the insurance might also cover on the ransom payment to the hackers, because normally the hackers they will ask for ransom payment. So in this scenario, the insurer might able to cover you on this part as well. So cyber risk insurance is becoming more and more important, especially for the entrepreneur who run their business online. Okay, so these are the three important second layer primary risks that we need to consider to cover for our clients. Okay, so as an entrepreneur, basically apart from understand on what is the things that can cover ourselves, we also can implement some risk mitigation strategies. Okay, first of all, what you need to do is you need to identify and prioritize what is the risk that might be happening to us. Okay, and how relevant is the risk that can impact on your company financially. Okay, and would the impact cause you a material damage to the organization or not? Okay, so this is very, very important. So I'm putting all this into a risk mind mapping. So how can we see this is if the impact is very severe and the probability of getting this risk is very high. Okay, so we might consider to insure on this part or transfer the risk to other parts. Okay, but let's say if the risk is severe, what we can do is we can enhance our internal control system and see how the things can be monitored, reviewed, and so on. And let's say if the risk is with a minimal impact, so we just observe and see whether we need to do any further enhancement on this part. So this part is to simplify what is the risk mitigation strategy that we can implement to our clients. Okay, so for the risk treatment, basically like just now, if you are in the green color zone, basically you just tolerate with the risk, no any action needed. Okay, and the second one is if you are in the yellow color. So what you can do is you can eliminate the risk by take actions to remove and enhance whatever internal control system, okay, to minimize the risk, okay, and to reduce the likelihood of the risk. And last but not least, what you can do is you can transfer some of the risks split to different area. Like some of the companies, how they do is they will put their factories into several locations, okay, or they might put their HR or finance into another locations and so on to protect on the likelihood of the damage. Okay, and last but not least, they also can transfer out the risk by getting it insured. Okay, so actually, for us as the independent financial advisor, how are we going to protect our client? Is that basically all our client we will need to go through a proper financial planning process. Okay, from the process, basically we can understand what is the fact, what is your needs. From there, then we will do some analysis, and from there we will do some proper recommendations and product implementations based on your expectation, based on your needs, and so on. Okay, so in terms of the life insurance example, to protect the key man, to protect the shareholder interest, okay, to validate the buy-sell agreement and business value protection trust, how we did is we will need to understand the client concern, we need to understand the client budget, and from there, our financial advisor normally will check through all the insurance provider in town because our value is we are providing independent and unbiased solutions to our clients. And from there, we were able to identify what is the best for the clients, and same to the general insurance as well. So this is our practice methodology. Example, a corporate client, he need to insure, example with product liability. So how we do is we will have the analysis and see what is the things required by the clients and their budget and so on. And what we do is we will check with the respective underwriter from the insurance company and see what is the best that can provide it to the clients. So this is our process and so on. So ladies and gentlemen, the biggest risk a person can take is to do nothing. So if possible, we need to do something to protect ourselves from any of the risks which we mentioned above. So if you have any query or if you have any questions, feel free to come to me. Okay, this is my contact number. This is my email. So you can PM me for a compliment 30 minutes catch up, so in order I can understand you better and see what is your concern. So with this, thank you very much. I'm ready to answer any of your Q&A in the floor. Thank you. Have a good day and stay safe.
Okay. Hello, Stanley. Thanks so much
Hi,
for
Andrew.
the wonderful sharing that you have. And it's very, very interesting actually on my part because I actually have a lot of questions to ask
Cool.
you.
Hi.
Yeah. Okay. I understand that your industry is about risk mitigation,
Yeah,
and
yeah, right.
and definitely is something that resonates very well with entrepreneurs. And I also going to plug in the last word that you said. No, not you, but the caption that you put out at the last slide, that the biggest risk a person can take is to do nothing, right? And
Yeah.
and unfortunately today, entrepreneurs are taking that biggest risk. Entrepreneurs are taking that biggest risk, and because of you see, you I understand that a lot of work that you all do are corporate, but when it comes to entrepreneurs, there's always a budget constraint. And because of that, that's the reason why they take the biggest risk, that is not to insure themselves.
Yes, you're
That's the
right.
biggest risk, right?
Yeah.
My first question to you is this. How can we help these entrepreneurs to really take on some form of two things? One is actually personal,
Mm.
because entrepreneurs, when they first start out, they are basically their own wealth creating asset.
Yes, you're right.
Second thing is business liability, and a lot of entrepreneurs do not take that kind of business liability. So these are the two biggest risks that they take on in their business. How can we help them?
So first of all, there are two important things that we need to take into consideration as a businessman. The first is definitely as a human, as ourselves. Okay, so we need to protect ourselves. That's what if unfortunate thing happen to us or catastrophe happen to us, some guarantee funding can be paid out. So when we talk about guarantee funding, definitely Andrew, you say, you asked me to buy life insurance. Because for us, we are a bit different comparing to the life insurance agent in town. So what we do is we are independent. We champion all our entrepreneur interests first. It means that we prioritize your interest. So from the understanding, from the financial planning process and the fact finding process, we were able to understand what is your needs, what is your concerns, and what is your budget. And from there, how we do is we will see what is available in the industry, and that can cater to your needs and your budget. So it doesn't mean that you need to commit a lot of monies to get the things done. Sometimes there's a lot of, I would say, quite reasonable and affordable insurance scheme in town for the businessman as well. That is on the human part. Okay.
Yeah.
And when we talk about the physical part, that is on the fires, that is on our physical assets as well as on the liabilities. Definitely what we need to do is we need to prioritize, okay, what is the major risk that might be impacted on our business. Example, if I'm running, let's say an engineering factory, okay, so the machinery definitely is very important to me. So I need to make sure that the machinery will be my prioritized apart from the buildings. And example, let's say if I'm running an online business platform, so definitely I might face a lot of cyber risks, sometimes my portal might be gonna hack, then some of the ransom guy will come in and ask for the money, this and that, and our client might be impacted due to the data loss and so on, and they might come and sue us. So in this scenario, definitely you no need to cover on the fire, but definitely is on the cyber security risk will be your priority. And from how we do is we will get into the scenario and we need to understand our client scenarios, what is their budget, what is their concerns, and as usual, we will see what is available in the industry itself, and we can champion our client interest.
Yeah. Yeah. Um, I personally, as E3 Hub, an organization that champions entrepreneurship and having a lot of entrepreneurs in our so-called membership, right?
Yeah.
Now, very important for me when I was looking at it, because this is based on personal experience. When I was a struggling entrepreneur about almost 20 years ago, I do have insurance before that.
Yeah.
But in the end, because of my struggle, I have
For
to
the cash flow.
forgo away the insurance.
Yes,
Right?
understand.
And fortunately for me, I still retain, one or two that is still currently servicing. But previously it was under umbrella, that kind of thing. So you can understand this hardship that we are facing right now. So because of that, right, I always this thinking about creating like an group insurance kind of thing for entrepreneurs and making it available for entrepreneurs within our ecosystem, so that they can not only just insure themselves but also insure their business. A few things that I was looking at. One, of course, entrepreneurs don't take care of themselves. One. So they fall sick, that's it. They go to the hospital, die already. Sure die one. No insurance, nothing to cover. Business also, yes. Business also start already.
Yeah.
So I was looking at something that can help entrepreneurs, at least have medical coverage and business coverage and so on. That's number one. Yeah. Number two is, again, business liability risk. Right? As you just mentioned, you are online or even you do food services business, right? Yeah. And suddenly somebody get food poisoning and sue you. That's right, you go shop already, So a lot of people don't realize that, but I'm trying to get them to realize that these are all major risk factors that you have to cover. Because as an investor, I will ask the same question: what happens if someone got food poisoning? Because that is the risk to me as an investor. So now, I have spoken to so many insurance, I don't know what they call it, agent or whatnot, but none of them are able to come up with something that is suitable for entrepreneurs. And I can tell you straight away, it is a huge market, a very huge market, right? So how do you think you can help us?
So for the entrepreneur, we talk about life first, okay? So eventually, like some of the startups or new ventureship in town, so they might come to me, hey, Stanley, now we want to enter into a mutual agreement. I want to start a business. Example, I start a business with you, Andrew. So the GDV might be maybe 10 million. So definitely you are worried that, wow, 10 million, I mean, the premium might be killing us already. No need to do the business already. So how we manage our client is either we can put you into annual renewable term. I don't think you have heard about annual renewable term before. No. So the premium is definitely very cheap and it's very affordable. It means that when the business is completed after 3 years, okay, so we can stop the premium immediately, and the premium is relatively very cheap, and the premium will be increased by a marginal percentage only every year. So this is the most insurance scheme applicable to developer in town. Let's say if I own a land and you got the capital, so we enter into an agreement, we want to develop a land in Bukit Mentajam, for example. So this is the cheapest scheme in town that can protect you on that.
I used to, when I was doing property development, I used to buy this, what you call all care, everything all comprehensive one, the kind of insurance. Yeah, we pay quite a lot of money, 20,000-30,000 in those days.
Yeah.
So,
like recently, I just done a case for my client. They are from pharmaceutical industry. Their company has just been acquired by a listed company. The valuation is, I think it's about 20 over to 30 million. But definitely the investor might be very worried, touch wood, if the CEO suddenly not away. So how am I going to get back my guarantee funding on the investment? Right. So they requested this particular CEO or the GM to insure himself with the 20 million based on the annual renewable term. And the premium, frankly, is surprisingly very cheap.
Very cheap is how cheap?
30 million, some measured, the premium per, and I mean, he's a 48 years old right now.
Yes.
The premium is about 4,000 per month.
Oh, that's very cheap.
Yeah, very cheap.
That's very cheap.
Because for us, we are not coming in to get a huge profit from that. Because what we did is we wish to hold our client hand and grow together with them. That is our objective. And how we do is we practice independently for our client interest. Yeah. So that is our objective.
Right. Do you have any insurance for confinement homes?
Confinement home, normally you need to cover it with simple basic fires. The most important one is the public liability.
Yeah.
Because a lot of visitors come in.
You call it public liability or you call it business risk liability?
There are a few types. The basic one will be to cover on the fires of the building.
That is given. That is given. But I think the most important major risk mitigation is on negligence.
The public liability.
Negligence. So
Yes,
is that considered
negligent.
public liability or is it the business risk?
It will be considered under professional indemnity, but the term and condition is you need to make sure that all your supporting staff is they are skillful and they have the professional certificate. It means that you need to engage a registered nurse to run on that.
That's where the problem lies.
Yeah, because
Right.
a lot of the maternity home, they never engage a proper and licensed people to run on that. So end up when the things happen, then it will turn out to be really ugly.
No, we may have licensed people, but not everyone is a licensed person. I mean, when you talk about support staff, the cook and all those, they are not, no, they don't need license. But when we talk about the matron that that take care of all the mothers,
Yeah.
maybe yes, right? And even again, what definition of license? Because like my entrepreneur, she attends all the courses and whatnot, right? And got a certificate.
Yeah.
But is that considered a license? So
at least that is the basic requirement.
yeah.
I mean, to enroll you.
What's the basic requirement? I face this problem because I have 4 confinement homes.
Wow.
I have 4 confinement homes in KK, and we're trying to get a not basic, we want to get a business liability, like you said, the professional services type. And I understand that because I already can see that risk. But the process of getting that kind of insurance
is tough. Because you need to meet the basic requirements. I mean, all the staff need to be properly certified.
Yeah.
They have a properly skills.
And the problem, and also the problem is this: we are not medical.
Yeah.
Right. But when you say professional, I believe mainly medical, doctors, lawyers, and so on. But here is a very gray area.
And there's no authority to come up a proper guideline for you to comply with. Yeah.
So how do you think you can solve our problem?
Get all your staff to be certified. That is the basic requirement. You need to have a doctor inside, frankly.
A doctor.
If any things happen, right? So at least a doctor there can be attended on that.
Yeah.
And we need to have a registered nurse to help you to take care of the babies and so on.
Yes, that one, yeah.
Yeah. So with that, then we can talk to the insurer and see which one is more suitable for you.
I see.
And the other thing you also need to take into consideration, apart from the PI, apart from the professional indemnity, is on the directors and officer liability.
Yes.
Because you are the director and you are the owner as well as you are the officer of the company. Regardless of whether the negligence is on your staff or on others. So definitely as a client, I will come to you because you are the owner. So D&O is also very important for your case.
Okay, thank you for the tip, because I'm going to tell the entrepreneur that she had to go and get her insurance to cover herself. And also we have so I am trying to just pick up those companies that we have incubated that probably will see insurance as relevant to this. But a lot of people don't see insurance as relevant.
First of all, I think most of the businessmen, when you talk about insurance, the first mind come to them is, well, I need to pay money.
Yeah, that's right.
So my personal thought is that because your business is making some money, so what you need to do is you just allocate part and partial of your profit and just pay for that. So indirectly, we cater this as your business expenses. So I think it's okay.
Yeah.
Not too bad.
I think that's okay. That's not too bad. That's true. Right.
And you need to make sure that everything is documented. I mean, whatever agreement with the investor together with your shareholders, you need to make sure there's a proper agreement to be inked properly.
Exactly. So for an online food services company that actually they just produce food from the cloud kitchen, what kind of insurance would they require?
What type of foods? Fast foods?
It's staff food as well as the subscribers food lah. That means it's like a different carrier, the kind of food.
The question from the insurance to you is how is your QC look like? So they might need to see how is your quality control, whether a proper center kitchen has been set up, like Old Town, okay, just use example Old Town. So Old Town, they have a centralized kitchen. They have all types of hygiene SOP factor to be complied. But for the small runner, there are a lot of question
small
marks.
runner.
Yeah, so they will come out with a lot of questionnaire to you.
So you know lah, now because of COVID, there's so many small runners as well as those home-based ones.
Yeah,
right.
Home-based one a bit difficult frankly, because for the centralized kitchen, with all the equipment in place, they are able to get the local authority license, this and that. That thing will be very easy for us to implement. But let's say for the home-based, then it will be quite challenging because there's no QC.
Yeah.
Where you buy your ingredient, whether the ingredient, what is the QC check on that? So on the baking process, is your staff already taking the immunizations? Yeah, so a lot of things they will ask.
So you go for MISTI certification and all that stuff, and you don't see that in home-based businesses. And I think that is going to be a very, very major risk liability for home-based businesses, which is the reason why home-based businesses actually need to graduate up to become a real business. Otherwise, right, you are exposing yourself to potential bankruptcy, I would call it. It's home-based business, but you are just a sole proprietor. So you are personally liable for all these liabilities that may incur.
Yeah, you are right. Example, we compare to the Australia environment. Let's say if you are in the Australia, you want to sell a nasi lemak, just for example. Definitely you need to go through all the courses, the hygiene class, whatever class. Only then you are allowed, they will only give you a permit and you can sell.
Yeah.
And they already designated the proper place for you, not in Malaysia. I mean, you can start a nasi lemak store beside your roadside.
Anywhere, yes.
Anywhere. So that is Malaysia border culture.
Yeah, I think both of us are sounding like a doomsday sayer here in this in this Q&A session. But essentially, I do agree that we have to do something about creating a lot more awareness among entrepreneurs on the importance of insurance. Now we cannot see insurance as if it's it won't happen to me it won't happen to me, that kind of thing anymore, right? Because when you're in business, anything can happen. Even COVID can happen, to anybody. What is this? Any risk can happen. So I think entrepreneurs really need to be very mindful to have at least an insurance policy to protect themselves as well as to protect the business.
And the bank will come to you as well if you don't have.
Oh, what do you mean by that?
If you are the acting guarantor for your company, let's say I borrow 2 million from the bank in order I can run my company. So touch wood, if anything happened to me yesterday, the bank definitely will come over and take over your personal asset because you already signed a guarantorship during your lifetime.
Right.
So our spouse and our children might be suffering.
I see.
They might come in and let along our royalties.
Yeah. Okay. Take note, entrepreneurs. Remember all that. Okay. Well, thanks so much, Stanley.
Thank you,
for spending some time with us in Women Business Channel. Will be
my honor to you. Thank you so much.
I will definitely be in touch with you. Okay. So, to all audience out there who are watching, so please get yourself insured. Not only just yourself, but also your business, because there's plenty of risk and liability involved. That will also, even if you have a business, right, it can impact your personal life as well. So talk to Stanley and see what he can do for you, since he already claimed that he can try to bring down the cost of insurance to all of us. So let's talk to Stanley after this, and let's hope we get insured by Stanley's creativity. Thank you so much.
Thank you.
Yeah, thanks, Stanley. And
thank you, Andrew.
Thanks. And the next session after this is going to be, if I'm not wrong, my session. So I'll be talking about cash flow management, how you manage all your cash flow in your business. Okay, so with that, I say have a good lunch and goodbye.
Thank you. See you. Take care.
Bye.
Bye.